Hi, this is Jin Rong, Market Strategist for IG Singapore. This week has broadly been risk-off, with a hospital blast in Gaza amplifying tensions in the Middle East, while the Fed's high-for-longer rate narrative is brought back into the limelight with hotter-than-expected US economic data. The VIX has touched its highest level since May 2023, while safe haven gold prices has touched its 2-month high, surging more than 2% over the past 2 weeks. Heading into a new week, there are 4 things you may want to keep your eyes on. First up, we have the US earnings season, which will shift into higher gears with notable releases from Meta platforms, Alphabet, Amazon, and Microsoft. Surging bond yields, particularly in the US 10-year yields, have brought more attention on their valuation, and markets will be seeking for justifications as to whether their earnings momentum can last. Next up, we have Australia's inflation out on Wednesday. The previous RBA minutes have been more hawkish than expected, and markets will want to see further moderation in pricing pressure to be convinced that the central bank has room to hold off on further rate increases. Current expectations for Australia's third quarter headline inflation is at 5.3% year-on-year, slightly easing from the 6% in the second quarter. Next up, we have interest rate decision from the European Central Bank out on Thursday. The central bank has previously left the door open for a potential rate hold at the upcoming meeting, and developments since then have increasingly shifted the balance against further tightening in monetary policies. Current expectations are that a rate hold from the central bank this week is likely a done deal, but guidance around where policymakers have their eyes on to determine additional tightening will be the key market focus. Last but not least, we have the US PCE price data on Friday. US policymakers have been unanimous that monetary policies have to stay restrictive for some time, but the consensus around additional rate increases have been more mixed. Given the September blowout jobs report, along with an upside surprise in US headline CPI, any persistence in the inflation numbers may increase bets for a December rate hike and amplify calls for a high for longer rate narrative. Current expectations are looking for headline PCE to tick slightly lower from 3.4% from previous 3.5%, while the core aspect is expected to moderate to 3.7% from previous 3.9%. That's all for now, and I will see you next week.